Well, as you know, stock prices are both driven by the earnings as well as the multiple that what investors are willing to pay for them. I think what we've seen in this earnings season is a pretty steady drumbeat of earnings beats. As you say, a lot of those numbers are managed to expectations, but even given that, I think we've seen a surprisingly good set of numbers. And what has been particularly reassuring to investors, I think, is it's been good stories across the spectrum, whether you take financials, the tech stocks, obviously, but even manufacturing stocks, the auto stocks have done very well. To your point about what you can expect from here, as long as the earnings part continues to deliver through the year, and the macro numbers would suggest that they will, we think that the market can continue to deliver decent returns from here.
And certainly when we look at earnings, it's, part of the fundamental narrative on how we predict how the stock market might behave in the future. But there's also the technical side, right? And if I just take, for example, the small caps, say the Russell 2K, which are generally a bit more cyclical, a bit more tied in with the domestic economy in the US. And at this stage, they're at a record level above the 200-day moving average. And some say that indicates that they might be ready for a pause, at least in comparison with the large caps. What are you feeling on that front?
We've seen, I think, over the last few weeks that the market is susceptible, is sensitive to bad news when there's certainly have been delays on rolling out vaccines, concerns about new variants. I think that has put a damper on markets, but it has continued to bounce back again because you've got a lot of things coming into place. It is still cold here in the Northern Hemisphere, but the days are getting longer. There is a sense that spring is on the way. The vaccines may have hit some bumps, but they continue to roll out and continue to prove effective. And then you've got very powerful monetary policy and the prospects of a large new stimulus package coming through in the United States. And that's going to be helpful across the economy, both large caps and the small caps and everything in between. Now, I shouldn't say that everybody's going to win because there will be losers in different sectors and in different companies. But overall, I think the momentum is still good, particularly if the Fed keeps rates low, which allows for these multiples to remain at levels that we've seen recently.
Right, Christopher, good morning. Thank you for joining in this conversation. Do you think a large stimulus would help the junk bond markets, the high yield market? The average high yield yesterday, I think overnight dipped below 4%. As the economy improves, would that improve the quality of credit?
I think we're all very sensitive to these valuations and comparing them to their historical levels. But this is really a very unusual moment in the market's history, I think. And the new stimulus is going to be helpful, particularly getting money into households. As the market opens up, presumably that money will get spent. And again, not everybody, but the companies that have good business models, reasonable prospects for driving revenues and taking advantage of that will do well, at least through the end of this year, we think.